Well, I think there is a story in the Silicon Valley Bank US case, which I think we will come on to, I'm sure, which is to do with the treatment of it, what we call interest rate risk in the banking book. So this is not trading activity, this is interest rate risk in the bank. We treat that differently in our capital regime, which I think we set out in the paper we sent you, and I'm happy to, we'd be happy to go through that. We treat it differently to the US, and that is an important difference. So I think there is an issue there, because of course that obviously goes back to... Sorry?
We're not out of the woods. The banking sector is not out of the woods.
That is an issue, but it's not, I think, an issue in the UK because we do treat it differently, and that obviously relates to the question of the of the rise in interest rates and how much and how quickly. I think there's a lot that was there was a lot that was idiosyncratic about Credit Suisse, which we can say a bit about, but obviously it's not one of ours as a parent. Now, to your question, I don't think that any of them, and we've said this, that any of these features cause stress in the UK banking system. But the definitive yes-no answer to your question goes back to what you said about the markets last week. They are trying on to find points of weakness at the moment. Now, I don't think we are at all in the place we were in 2007-8. We're in a very different place to then. But we have to be very vigilant. So if I give you the answer, I don't think there's a problem going forwards. I do not want to give you for a moment the idea that we are not very vigilant, because we are. We are in a period of very heightened, frankly, tension and alertness, and we will go on being vigilant. So, in a way, that's the message I'd really like to give you, if you don't mind, in answering that question.
Okay,